Hi there, traders. This is Brad Gilbert. Now, I want to explain the RFB execution strategy. Okay, it's a range trade setup with a false break execution strategy. All right, so it's a little bit of a tricky little combination, but as I'll explain, I was experimenting with a couple of different execution last week, particularly on the euro, where there was various geopolitical events impacting. And it turned out to be a really good option and saved me getting into a range trade because I had the protection of a false break execution strategy at the back end. Now, that won't make a lot of sense just now, but it will once I explain how this works. Okay, so just looking at the setup here on euro. Now, we did have the structure of euro looking quite good. Now, overall, it is trading in a downtrend, but we are getting sort of sporadic large spikes back up. And when the currency is in a downtrend, one of the hardest things is trying to work out, do I get short at this trend line? Do I get short at the next trend line? You know, and it's one of those things, Murphy's Law, if you don't get short, it goes down. If you do get short, it tends to go up. You know, one of those things that sort of messes with your head. But the major thing is, major risk, okay, exists at the entry. You know, but the key to this whole thing working is you need to have a clear trend which allows you to get into the range trade in the first place. All right, so that's exactly what euro had. Now, let me just zoom into this opportunity. Now, the normal range trade setup, okay, we've got a resistance line, say with at least 3 touches, and it's coming back to test this resistance after spending a little bit of time on the downside. It's rallied back up. We've got this new high established, starts trading sideways, tops out again, and now we're looking for the opportunity to get short. All right. Now, this is where, you know, your general order, your range trade comes into play. But at the same time, because the momentum, this is where the opportunities, you have to identify the opportunities as well. It is trading sideways, so probably a lot of the initial momentum has been lost, right? So you're looking for the range trade to get into the whole trend move down, but we've lost that initial momentum. So the range trade, there is a little bit of risk around it, and we may get caught up in that first spike. All right. So with that, and you know, this happens quite a lot. So you don't want to be sort of wasting your good cash on these opportunities. So if you're using Trendline Trader, we identify the resistance trend line, okay, first and foremost, and then we base our execution line. I generally have it at least 12 points from the resistance trend line in this example. You know, same for support if we had a move on the downside. So that level is maintained the whole life of this order. So until it gets executed, this execution line tracks the trend line by 12 points, right? That's the sort of general way these things work. So when I set up my order, at this point where it would have got executed at 116.68, my order is executed at 116.56. Now, this is where you can feel a little bit uncomfortable and where the risk is. We know it's trading sideways, but overall the trend is down, right? So all we're looking for is the trend line to hold. Now, if you're not confident and it has lost a bit of downward momentum, well, then the easiest thing to do is set up a different order, because otherwise you're going to have, once your entry order is set in play, you've got your stop loss and your take profit, they're set, and then you've got nothing to sort of protect you against that initial spike. If you survive the initial action up against the trend line here, invariably you're in a good trade and it goes down. But the range trade can get churned up, you know, just by economic numbers, geopolitical events, all these sorts of things. Okay, so what we want to do is protect ourselves from this. And this is where the range false break, the RFB execution strategy comes into play, right? So we've got the execution line, the same as the range trade. Now, with the range false break, using that false break execution strategy, we can set up the trigger line wherever we like. Now, in this example, just to show you how simple it can work, the same as the range trade, I've actually got the trigger line to be positioned just above 1 or 2 points above the actual resistance line itself. So in this situation, what I'm looking for is, I'm looking for the currency to test higher, actually test the resistance trend line first before I place the order in the market. Okay. Otherwise, if I put the order in the market, it's already up here. I'm already looking at potentially a loss. So this way I can actually give the currency a little bit more room to breathe and let it test the top side first. Okay. Once it does test that level, it hits the trigger line, then the execution line becomes a pending order. It doesn't become a pending order until it hits here first. Okay, that's number one. When that happens, then the entry order is set up. Okay, so now I feel a bit more comfortable because I'm only going to sell here if it goes back down. And that's usually the sign it's going to be a nice trade. Okay, so, but then what we can do to protect ourselves, okay, because the currency is already above the level where we were going to sell, all right, so you're still thinking, well, I still like the downside. The trend is down, right? So that order is looking to capture the move down. I do have a level at the top here. It's called the false break maximum move over. So in abbreviation terms, that's false break max over. If it moves a maximum move away from the trend line, well, then I want that entry order cancelled. And that's exactly what this is doing. So if you want to get aggressive, right, you would have the trigger line, say, 1 to 2 points above the trend line. That allows you to get your order set up as a pending order as soon as it tests the trend line. And then what you can do on the top side is actually have, and you know generally if the currency moves 12 points above the trend line, then it's going to keep going. So you can actually have your false break max over at 12 points, right? So that means basically if the currency, let me just clear some of the screen, if the currency moves higher and you know it can have a few false breaks and comes back down, then that's usually a nice trade if it goes above the trend line and comes back. But at the same time, if the currency goes above 12 points, well then invariably it's not going to go back down. It's not going to do that. It will just keep going, and that's when you want that order cancelled. Okay, and this is where the luxury of this order comes into play, because your order doesn't get set until it's above, well, you can set it at the trend line or just above the trend line if you want to be aggressive. And your order will be cancelled as soon as it moves beyond that level. So instead of getting stopped out, okay, at that level 12 points above the trend line, instead of getting stopped out, simply your entry order here is cancelled, all right? And basically it takes the risk off the table, all right? So with the whole structure, so once again, if that maximum max over level gets hit, then your entry order is cancelled off your platform and you've got no more risk. And the main reason we do that is because if it's gone through more than 12 points above the trend line, what you generally get is you get it coming back down to test the previous resistance line, which is now acting as support, and it shoots higher. And occasionally what can happen is you get the max move over, you get a bit of a move back down through it, and then it keeps going. Basically, the price action becomes a little bit convoluted here, and you don't want to be a part of that sort of trading activity. So this is where the max over really is your insurance policy against a move through the trend line against the trend. So first of all, you've got the trigger line, right? That's your first part of the structure of your order, which then sets up the entry level. After that, once that entry level is set up, you've got your stop loss and your take profit in the market, all right? But if it does go through the trigger line and then it hits the false break max over, well, your order is cancelled, and that protects you from that move straight through the level and saves your range trade opportunity just getting stopped out and losing some cash. So the range trade, the RFB strategy is a range trade with a false break structure. Right now, there's a number of different ways you can set this up, and I'll show you that in a minute, but it does protect you against sharp spikes, okay? And this is generally with, when trends are generally just starting and we've got like 2 or 3 touches on the trend line and you're not hugely confident, it's not like a super strong trend line, well, then that's when this can come into play. We have had loads of random geopolitical events, and even with trending markets, you can see the markets turn around very quickly and just shoot through, give them enough momentum to take out some stop losses above the trend lines. And that's what the RFB strategy will protect you against that and get you into better trading, get you into better entry positions, I should say. Also, if there's economic data coming up, and I'm talking about sort of tier 2, tier 3, the sort of medium impacting data, that if it is variant, it can move the currency sort of into the into the support or resistance trend lines and even potentially push them through 5, 6, 7, 8 points through those levels. And then before it drifts back into the range, it's a very good opportunity to use the RFB strategy around those events. And also when there's no, when the market is waiting for major economic data, say the data's coming out in say like 20 hours, like the next day, the markets have a potential time to squeeze where the market is, say, Euro's going down, it's got a very good trend, the whole market is sitting short. Well, what can happen is it can slowly start climbing and get enough momentum just to pop through the resistance trend lines and then take out the range traders or the trend traders and then drift back into the range. So that's a good opportunity to use it as well. And what they are all ideas of, if you're not confident with the trend will continue, then this is the best way to potentially get into it, because you're getting into the range trade following that trend, but you're actually waiting for it to sort of almost have a hiccup along the way, right? And it's a very good way. So instead of like you think, well, it's a 50-50 if the range trade holds here, well, you know what? I can go in with the RFB strategy and it's more like you've got 10% of the risk that you have with the actual range trade getting triggered straight away. Now, let's look at the second opportunity here where Euro last week went through that first level around 116.65, okay, and then this first level, and then was coming up towards the second level. Now, this is a little bit better trend line, okay, but we've got a bit of a tricky situation here because when it broke through that bottom trend line, now the overall trend for Euro is definitely down, right? But what we have to protect ourselves against is the initial momentum. And when you have a trend line, say, 50, 60 points above the first trend line, well, it may actually get enough momentum, as you can see in this example, to spike above it. Now, when it does spike above this, it can also trigger the next level of sort of buying that pushes it even a little bit further through the level. So once again, let me just zoom in here and explain exactly that. So what you've got to do is you've got to identify the chart setup, where the currencies come from, how good the trend line is, to really work out whether you go in with a range trade or you go in with, say, the RFB strategy. Now, when the currency generally it breaks through a level and it's coming up to the next major, say, resistance level, it's got a huge amount of momentum that this trend line needs to absorb, right? And with that, you can often get overshoots through the level. So if you go in with if you keep the RFB strategy is like, well, you know what, I'm just going to have my trigger right next to the trend line. Well, sometimes you will still get run over like the range trade. You have to think of the opportunity and the setup. Now, the setup on the downside down here, it's been trading sideways. It's a lot more relaxed, okay, because there's no serious momentum straight away. Now, what this was an economic data. So I saved myself some cash on the first opportunity and the second one, okay. Now, what I did is, because it had extra momentum moving to the top side, I raised my trigger level to make sure it was not right at the trend line, because I don't want to get triggered at the trend line. I'm thinking, well, you know what? The risk is that it overshoots the trend line. So like my normal, say, break trade or most of my execution, I execute 12 points either side of the trend lines. So by raising my trigger level by 12 points above the trend line, what it does is it stops you from getting caught up in that initial price action. You want the currency to settle down before you start to place orders, especially when it has a bit of a run towards a level. So in this situation, we've placed the trigger line, say 12 points above the level. I missed the first initial wild price action through the level. You can see how the barroom brawl there is sitting up there for about 5 hours. But if my order's at 12 points, it's actually, you can see it's at the exact right level for me to put the order in play. Now, once that trigger level gets clicked or hit, I should say, the entry level comes into play at 116.98, so back below the trend line itself. And then at the same time, if it does push higher through that false break max over, I don't want that order in play. And that's exactly what happens. So as soon as it the RFB strategy, I should say, depending on where you place the trend line, right, you can miss the initial carnage of price action, especially on a strong momentum move. Our order is in place. So yeah, sure. If it still trades up here, I'm still looking to get into the range trade, which is basically the false break trade back into the range. But at the same time, if I do have that order in place and it does continue a little bit higher, I want that order cancelled. Okay. And that's what the luxury of this strategy does. It gives you that opportunity to be flexible. Now, the RFB strategy, before you ask, it can only be implemented with Trendline Trader Mark II. This is one of the major upgrades of Trendline Trader. It should only be used in specific market setups. Now, if you have an aggressive downtrend with strong fundamentals, well, then I will definitely be using the range trade, the static range trade, to get into that trade. If you use the RFB strategy on a really strong downward move with strong fundamentals and strong technicals, you are going to miss the opportunity. The RFB strategy is for those opportunities where, yeah, the trend's still in play, but maybe the current setup is not as funky as it could be, right? Still get you into the trade, but with less risk. And it's a great alternative to just using your static trade. All right. Now, let me just show you how to set this up. Now, let me just come across down the bottom here. Now, what we are looking for is, first and foremost, you need to have a trend line. Now, I'll just put it on sterling here. We've got a nice sort of resistance trend line. Now, if I come over to Trendline Trader, all I need to do is set up the false break trade. So usually I would set up the range trade and just have that in place. And so that's 12 points from the market. Now, I could set that up. Let me just show you a bit of difference. I've got no strategy for the downside, so I'll select that to none. I've got the range trade, 12 pips from the market, and the rest of the trade is set up. So if I set that in place and I label the trend line upper, that would set that order up for me, the range trade. You can see statically, yeah, that's it. So I've got my range trade, and the stop loss and take profit at this point do not exist. When it hits that range area, the entry order does become active. Now, if I just right click on the chart, go down to Expert Advisors, go to Properties, I can just change that upper strategy to false break. Now, as I said, this is where we can get a little bit more creative. The false break pips, okay, that's your trigger. That's the trigger level. So I can have that I usually set that at 12 points. But say, for instance, I think we might see sterling just spike up, say, 5 points through the level. I can set that at 5 points. My false retrace pips, you can also adjust that. I like to set it at the same level as where I would on a range trade, which is 12 points from the trend line. And my false break max over, well, you know what, I might make that, if it goes through by more than 12 points, then that's where I want that order cancelled. If I hit enter there, now you can start to see, you can't see too much up there, but what you can see is where, if I just take that back one notch, you can see where my trigger level is. So what I need to happen for this order to come into play, okay, is I need it to go up, sort of test the trend line, actually even go through by 5 points. If it goes through by 5 points and then falls back down, my order will be executed at the execution line, which is 12 points below the trend line. Now, at the same time, if this order keeps on going, okay, and it goes through the max over, which is, as I said, 20 points above the market, then, let me just get that pen up, okay, then that order below here is cancelled, okay? The entry is cancelled, and we start again. You come back the next day and have another look at it. So one of the key things is, as I said, there is human interaction here. You need to be smart and identify the opportunity. Now, this opportunity here on sterling is a very good one because, as you can see, the price action, it's not volatile at the moment. It's, you know, we've lost a bit of downward momentum. Sterling is still trending lower, but it's sort of just drifting sideways with a little bit of downward momentum. So I'm still thinking that this is a really good opportunity to get into the range trade, but we know there's a few little geopolitical issues still with sterling. So there's a chance here that the order itself could still drift above the trend line and then head lower. We don't have any major data out, so I think the trend is your friend. It should go lower, but to be safe, you want to set your order up correctly. So in this situation, this is a good one to think about. Well, I don't have a huge amount of volatility just at the moment. So with the false break pips, okay, so this is my trigger to get my entry order in play. I could potentially just place that at 2 points above the market. So really what I'm looking for is to test the trend line. You can either make it 0, or which is the trend line itself, or just 1 point. The false break pips I'll leave the same. And the false break pips max over, that's 12 points from the trend line. Okay, so with that, I can just hit OK. And you'll see how the trigger level is now basically right on the trend line. So all I need to happen at this point is the currency to test the trend line. And you know what? At that point, and if it drops back down, my entry order will be ready to be executed. But on the off chance that it does keep going higher, that entry order, that blue one, will be cancelled. All right. And that's the RFB strategy in play and identifying the opportunity. All right. So once again, have a play around with Trendline Trader. As I said, you can set this up to be however you like. As I said, the false break max over is going to be down to yourself. You need to get a little bit more experience around your levels and the opportunities themselves to work out exactly where is the best point to use the trigger for the RFB strategy and where's the best point to have the max over. To me, the opportunity on the top side or a range trade in this situation, I'd say in about 98% of opportunities, okay, if the range trade is going to be in play, then you don't want to go above generally by 12 points. Okay, that's where I would have the max over. But if you want to be a little bit sort of on the safe side, you may have your trigger at 12 points and your max over at 20. Right? That gives it a bit more of an opportunity to shoot through and then potentially come down. You probably do that in more volatile markets where you've got a trend, but you've got some volatility around geopolitical events or economic data. All right, I hope that makes sense. So once again, have a look at your Trendline Trader. All the profile for your strategy. When you do put this in play, you can be very comfortable knowing what it is. As you can see up the top here on your chart, you will see the strategy, which is a sell order. Okay, you've got the actual resistance line, the false break pips, which is 12, the false break retrace pips, which is 12, and the max over, which is 20. So you can see all the components there before you turn your screens off. And don't forget, really, for those traders who aren't aware, if you are using Trendline Trader or any of the other EAs, execution EAs that we have, you need to either keep your MT4 up or ideally have these orders set up or have your MT4 set up on a VPS platform, okay? Because that way your platform is up the whole time and the execution tools of the EA are in place the whole time as well. All right, so that's the RFB strategy. I hope that makes sense. If it doesn't, jump on the Trade Zone. You can ask me some questions and I'll answer them for you. All right, guys, have a good day. We'll catch you later on. Cheerio.